The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face Warriors. Hi, Zig. I see everyone. Oh, hi, Pete. I'm not sure. That means good afternoon. Okay, nice to meet you. We have Danny Less with us today, a former floor trader on the Life Exchange. I want to ask him if that's a bowling alley now. Hello, Russell. So the team has notified me that today is the second year anniversary of Face, officially this day. Our mission has been to build up and edify traders every day, except Sunday. But you know what? The guys do. Thank you, Pete. The guys do play even on Sunday, right? I mean, how many of you guys listen to the week ahead video to get prepped for the week? Yeah, that's right. So, what makes it great? Every one of the team has put their heart into it. Yes, everyone has put their heart into it. That's what I believe. When you love something that you do, uh, it usually shows. And I don't know about you guys, but I have a great time being here for an hour every morning and bantering with Blake and Steve and Stell. And when Greg and Andre come in, it's really the best time I've had in the industry. But you know what? It's not how you start the race, it's how you finish the race. Okay. It's also another anniversary for me. 5 years ago, I was diagnosed with colorectal cancer, and I almost got stopped out, but God kept lowering my stop. So here's a new trading rule for you. Only God should move your stops. Write it down. I break the rule, and usually it's not for my better interest. Sometimes it works out, sometimes it exacerbates being wrong. So try and practice that, because I know we're all tempted. We still believe in the trade, and we figure maybe it'll go 5-10 pips under our stop and then turn. Well, let it take you out, and then if you still believe in it, what's the difference if you pay up? If you're long and get stopped out and you still believe in it, or maybe you should be reversing. Anyway, new rule for everyone that hears my voice, and I want you to raise your right hand and take the pledge. Only God can move my stops. Give me a Y if you agree to that. You guys agree to that one? Okay. 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 Well, then you guys are going to have a longer career than anyone who doesn't. You're going to have staying power, and it takes time to get good at this. I'm just starting to get good at this, and it took me 40 years. So be patient. Be patient with yourself. Anyway, let's start off with the euro, and everyone could see the euro, right? So you see how the Bollinger bands are beginning to come together and compress like this. So I learned this from John Bollinger. Okay, so he's the one that they're Bollinger bands. So John said that when you have compressed Bollinger bands, that the first breakout is usually a fake out. So how he would trade the euro right now, as you can see, we're on the underside of the band right here. And, I'm looking at about maybe 12.10 to take a shot on the long side. Again, I'm already, short dollars. But then what he does is once that happens, you wait for it to trade back inside the bands the other way. Okay, so I got this from the horse's mouth, who came up with the indicator that, I don't know, hundreds of thousands of traders use. So when you see bully bands compressing, it's not a good idea to go with a breakout above it. The first breakout is usually a fake out. Not all the time, just like everything else. Nothing, does that 100% of the time, but the probabilities are there. And if anything, maybe you won't go with a false breakout. You may not go the other way, but at least you won't get caught being wrong-footed. So Euro, I still think that you could almost call this we're developing maybe a right shoulder, and it's not a home run ball. But if we get through this top moving average after being down under here, I could see one of the 113 handle as being viable. All time frames, just like I teach three drives, Alina. You know, it works on all time frames. I mean, a rising wedge is a rising wedge on a 15-minute, a 1 hour, or 4 hour. Okay. So I still think the dollar, which is trying to hold here, obviously it was going to hold this 97 level. So, it's just the inverse. Maybe we trade 97.30. I wouldn't be long the dollar now um, on action and candle closes back under 97. Not because I'm not longer term bullish a dollar, just that a correction could take it down to here. And I was talking to Greg yesterday because I saw another Elliott wave count that actually says it would not interrupt the long term bullish picture of the dollar if we had something like this from here. And then when I looked at it, I went, one, two, and another one. I know I'm getting ahead of myself. I always do that, but you know, down here. And if that happens, that would be like a 114 euro. Talking about euro and what's happening in cable and etc. I just want you guys to look at something that's been, I think, aggravating a lot of traders. Steve says, don't even look at it, and he's been right for a year. Don't even look at it. But when I look at the weekly chart here in EG, and we're still underneath the breakout here at 86.5, and maybe we're going to 84. But look how much time you've had. This looked, like we might have had a false breakdown. 1, 2, 3, 4, 5, 6. A month and a half later, after taking out 86.50, where are we at? 100 pips underneath a breakdown. So that makes me skeptical. Of course, you're going to need closes above 86.50 to consider this a breakdown failure. And I'm not sure if it's because the dollar is going to weaken. That's going to do it. My intuition tells me that it's going to be during the next phase up in the dollar, where cable is weaker than the euro. So anyway, keep an eye on this because we start negating the breakdown. I'm sure there's a ton of shorts still trying to work this, looking for lower levels because 94 and a half and 86 and a half on a breakdown would take you down to 78. So there's probably some long-term targets based upon this breakdown. So just something I've learned over the years, that Mr. Market really doesn't make things that convenient for you and say, okay, Dale, you missed the breakdown here. All right. But I'm going to give you another 5 weeks to decide. Okay. I'm going to give you another 6 weeks to decide. And to get in, I'm going to let you in 6 weeks after a breakdown because I want to make it convenient for you to make money. So look at things like that with a jaded eye and be skeptical and think about where are the stops, okay? So probably a lot of stops over 86.50. So we'll see what happens there. S&Ps are giving back a little. Crypto had a great week. Something that I talked about um, when we were at a wave B or 2, in case you didn't have a crypto account. They had a trust on Bitcoin. So I was talking about it in here, and it's been a pretty big trade, not a double, but a pretty good trade. I'd be taking stuff in. Great interviews. Okay. And so, I would just be careful. You're not going to go broke taking profits if you've been long crypto up here. In fact, someone I know was really like Litecoin at 30 bucks. And this was many, many months ago. And he was looking for 100. on Litecoin. Bingo. So I think this wave is over. Now we're going to chop around. So with that being said, Blake, happy anniversary, buddy.
Damn it, I did not remember. And I never remember anniversaries, just so
Yeah.
you know. It's my wife will tell you the exact same thing. So
Yeah.
happy anniversary.
Yeah, well, you have a very understanding wife.
So it's been, yes, I do. Yes, I do.
You're blessed, man.
So happy anniversary. It's been, it's been a really great journey thus far with everybody here, and I appreciate everybody's support that's been with us, these last couple of years, and actually the last 3 years. Face Webinar has been live for the last 2 years, but we launched ForexAnalytix maybe 3 years ago, and our community is great. Especially the not only here, but the people that I end up chatting with for 10, 12 hours a day, and and I'm definitely not the only chatterbox in there. There's everybody else is chatting away. It's just a really great environment, and I enjoy that, the fact that we have been able to build such a great community over the last few years, and I look forward to continuing to do that, because as traders, when we're at home and we're just we're at home and we're just looking to have people to communicate with and to bounce ideas off of one another. It's so important these days. It really is. So I'm really glad that I'm able to assist in providing that with the team, and thank you guys again for all your support. Now, before I sit here and go too crazy on stuff, I'm going to post a couple of things. First of all, in our message box, I'm going to put in the let's see if I can put in the no, let's see, I'm going to put in the video on Real Vision. This is and I'll just give you guys the trade. And as you guys know, let me just put it in the chat box here. There you go. It's in the chat box, so you guys can watch it. It's my first appearance on Real Vision. It was a real pleasure. I don't know so much as it was such a pleasure having to put on a suit and tie or I didn't put on a tie, but putting on proper attire for that. But other than that, it was a real joy to deliver this message. You guys already know I'm bullish to Aussie New Zealand. Obviously, if you guys have been listening here on the webinar, you guys already know this. But the Aussie New Zealand was my primary focus. It's such a low period of volatility in the markets. Aussie New Zealand was really the currency pair I wanted to focus on, because we've seen such a big shift in the RBNZ and with the RBA this week, was it this week? Oh, it was Monday. The RBA stayed relatively dovish, but there's the RBNZ that really shifted. And with a potential upcoming China trade deal, it's going to benefit the Aussie more so than it's been with the Kiwi. And you can see just since last summer and really the beginning of this year, you can see that the Aussie dollar has really come under pressure as the increased pressure is mounted on China. If you take away some of that pressure, and it looks like that China and the U.S. are inching closer to a deal. A deal could be announced as soon as this weekend, actually, to today or tomorrow, actually, to where the President Trump and Xi get together and sign some sort of preliminary agreement. And it doesn't have to be a agreement that's set in stone, but it could be an agreement that is moving forward, where it's the first steps. And
the president, Blake, is meeting with the vice premier today,
and and it's going to take off a lot of pressure on the Aussie dollar as a result, and this could allow for the squeeze to continue. I'm gonna pull up the chart that's less messy. that I used for the real vision here is we have this move that could really be developing on the Aussie New Zealand, that we're above the 24% retracement, take us all the way back to the 200-day moving average, or maybe even higher than that. And when you come out of a descending wedge like this, it's a counter trend move, but it tends to be pretty explosive when they go, and that's, we're seeing the beginnings of it. And like I said, a China-U.S. trade deal gets done, we could see the Aussie dollar spike up quite aggressively, actually. And so right now the Aussie is, under a little bit of pressure. It's just kind of, it's under pressure as we're up against triangle resistance, but it's the Kiwi dollar that looks, pretty heavy. And if you look at the Kiwi dollar, even if the Aussie and the Kiwi both drop, I mean, if the Kiwi dollar takes out this 200-day moving average, we're gonna come under a lot of pressure. And so, trade deal or no trade deal, if this gets prolonged, the Kiwi dollar is already underperforming the Aussie. And if we get a trade deal, then the Aussie is going to really outperform the Kiwi, in my opinion, to the upside. And then, you can have the Kiwi that could, turn higher here. But the Aussie will probably, explode higher, back up towards its 200-day. And then you get a pretty severe move in the Aussie New Zealand. So anyway, that's in a nutshell what I was talking about on Real Vision. So if you get an opportunity to watch it, great. That's awesome. Okay, so let's take a look at other currencies as well. This has been one of the slowest FX nights we've seen. I say nights because would be days for you guys in Europe, but man, it has been very slow. It's been ridiculously slow. Tight trading ranges. You can see in the euro dollar. I mean, we've got a 30 pip trading range. Now that's a good thing and a bad thing. It's a tight trading range for now, but that means that if we do get a move, it could be relatively explosive. It could be a nice a nice move higher or lower should we get one. I don't know if this is going to be the case because, as you guys probably read, there was a Reuters article I passed around our chat room about FX volatility is at a 5-year low. That's obviously not surprising to us, but when you're
I just uploaded that also in the chat, Blake, for people to read if they want.
What's that?
The article you're referring to.
Oh, the article that I put in there. Yeah, it's thanks, Steve. I didn't know you were here today. All right, did you?
Well, I wouldn't miss our anniversary, would I?
Oh, are you broadcasting from home?
Yes, I came here for a few hours so I can tie up some loose ends and be here.
Oh, good. Are you going to do you want to be here for the webinar, or do you need to do other things? Oh, wow. Absolutely. I didn't know that. Okay. I was assuming I was going on. Well, since you're here, then let me take the next 10 minutes to really go through some levels really quick. Let me do that. I was kind of taking my time thinking I've got
go ahead. Go ahead. Don't worry about it.
So yeah, so let's go ahead and get into some of these charts. So as far as the euro dollar goes, there's if you remember yesterday, we were trading up here yesterday. We were trading at 112.50, and I said, hey, I wouldn't mind buying the euro down here at 112.20. Well, guess what? We're here now. Now that does that mean that I want to buy the euro right now? Not necessarily, but I do think that if you want to play the euro around these levels on the long side, you could. I'm real skeptical about actually buying or selling anything at the moment. My intent today is to actually go to the gym. So that's and I know you're like, oh wow, you're not even going to trade today. It's I really want to wait for something to happen versus me forcing something to happen. However, that does not mean that we can't get let me grab a pen here. If again, this is if you guys are really looking for something to do, we could get like a little inverted head and shoulder pattern here. If you want to try to play the euro on the long side down here, and then you just put your stops down here, because obviously if we take out trend lows, we're going a lot lower. But try to play a little inverted head and shoulder pattern, possibly. I think that's what I was thinking yesterday, and here we are. Again, I'm not long the euro. I'm just kind of saying that that there's a possible opportunity if you want to get long, right here. Remember, this is previous support from down over here, just so you guys can see it. Did the spike low back here in November of last year. So if you want to try to play it on the long side down here, you can, I think, and manageable risk. And that's the most important thing when you're trading, is managing risk. It's not, oh, I'm looking to, for the euro to make a move to 113.80 right now. No, it's like, okay, you got a targeted entry where you can say, well, I'm going to buy it at 112.15, and then I'm going to risk 10 pips to 12.05, and then look for a move back up to 12.50. And if I get really lucky, then it breaks out to the upside by happenstance. It's taking those types of opportunities, especially in this environment. All right, let's take a look at the cable. I think the cable is actually developing a bearish wedge now. I may not, I may be a little off here, because this may look something more like this. Probably better drawn, something like this. If while we're below 132, you might be able to trade it to the downside. The one thing that I want to say about the cable is that the thing about the cable is that despite all this talk of a hard Brexit, the pound really is holding up relatively well. I know I've said that quite a bit, but that doesn't necessarily make me want to buy it as of yet. I'm just saying that overall, in the grand scheme of things, it's holding up pretty damn well. Any positive developments through Brexit will be it's going to be viewed as bullish here. So I'm not bearish at this moment, but I'm not bullish at this moment, but I'm skeptical about being too bearish the cable. Although that while we're below 132, I think that that the risk is still to the downside. We get above 132 and things might shape up a little bit for the cable. Aussie, like I mentioned to you guys, a bit of a triangle formation. Tried to break to the upside here. Tried to break to the upside. Remember, we also tried to break to the downside. So I'm not convinced, but I think if the Aussie gets above, as I drew this blue line here, oops, not there. Yeah, we get above, 71.30, 71.50, then things start to look pretty good for the Aussie. It's a lot of work to get up there. Like I said, positive China trade deal. We're going higher, at least near term. And as I told you guys yesterday, I actually think that Aussie is a good short after a trade deal has been announced. May not be the same day, maybe a week later. I do think that the China's slowdown story is going to continue, and I want to use a big, strong rally in the Aussie to sell into, as far as the Aussie dollar goes. But I think a short-term squeeze could happen. Same with the Kiwi, and I'm not long the New Zealand dollar, but I think if you want to be long the New Zealand dollar, this is the spot. I'm expressing my Kiwi bearishness in the Aussie New Zealand long, but actually you couldn't pay me to buy the Kiwi dollar right now. I know it could go higher on a China U.S. trade deal, but I would be more apt to just look for some sort of rally up here to sell into. That's what that would be my that'd be my my play would be to look for a move up here to sell into if we get it.
Let me know when you do that, Blake. I'll stop drinking milk.
Great.
Right,
you're going to be the single-handedly drive down the Kiwi dollar.
Yeah, well,
do you really think you're drinking? Do you really think you're drinking Kiwi milk right now?
I have no idea.
Yeah,
I know it comes from Macau. I'm not sure where.
Yeah. I think you're. I think you're good, man.
All right, bro.
So the Canadian, we are range bound. Yesterday, the dollar Canadian was down at 133.20, and I played it to the long side, and I flatted it out, but I knew the dollar Canadian was going to firm up if crude showed a little bit of weakness, which it did yesterday, and the dollar Canadian ripped. Now, this is a real big and resistance is going to be this 133.75. If you're playing this range, the upper end of the range is coming up. So if you're playing the range, you can obviously look to sell it here, put stops above the highs if you want to do that, or if you're more bullish the dollar Canadian, like I am, I'd rather play it on the long side down here. So I'd rather be doing this. Would be how I'd look to play it if possible. But that's my thoughts with the dollar Canadian. Dollar Mexican peso was looking really good overnight, and then it just slumped out of nowhere. Like just as I woke up, it was like coming down. I'm like, what the hell is it coming down for? I'm not trading the peso right at this moment. I was buying it yesterday, made a few bucks yesterday on the long side. I left it alone overnight, but the dollar max, it's one of those things that one of those pairs that I think you can try to pick it off on the long side if possible. All we need is one announcement about a border closing, and then the dollar Mexican peso is trading at 1950 or higher. One announcement from Donald Trump about partial closures of the Mexican border, and we're trading way up here in an instant. Yeah, so I think the risk is, watching Donald Trump over the last couple of years, the risk is that you get it jammed up.
Yeah.
Up in your face at some point.
Yeah, don't go drinking in Tijuana, which I know you did at a very young age, because you could get stuck there.
Yeah, this is true. This is true. This is true. I would, and I'll tell you, if there's one place that I wouldn't want to be stuck in, is Tijuana.
Me too.
I go in there. I haven't been in years.
I'm nervous when I go down there. I would go down there for dental work because it's less expensive, and I was nervous until I got on the other side of the border every time.
I'm not nervous as long as I'm near the bars, because that's where all the Americans are at. But you start to veer too far away from those, and then it gets a little sketchy, especially if you're not with a local, or you don't know Spanish all that well. It's a dangerous place. It's really become more dangerous over the years too. Yeah. It's not when I was a kid in the 80s, and being there was I think a much safer place than as time has gone by. But anyway,
I like your line in the end up there, Blake. I like that.
Well, we're rejecting, so the dollar
one more
yen
time up there. I think I might try it. See how every day, because I didn't have that line, but I have a bias, and then you come up and you show your charts, and it almost like adds to what I was thinking of doing. So thank you.
So let's think about this really quick. If the U.S. and China have a trade deal, what's going to happen to bonds? Bonds are going to sell off, right? Yeah. So let's take a look at the 10-year. So here's the 10-year chart, and if you guys haven't seen this is everybody and their brother's uncle's monkey is long. The 10-year. Well, at least was going into this. They got squeezed out. You got people long. We hit this 161% extension, real divergent relative strength. We've come down. We break through this support, and yields are going to fly. So if bonds drop, yields go up. Yields go up. And that's what you look at the dollar yen. Man, this thing is at risk of trading back up towards 115. Now, 115 is going to be a big resistance, obviously, but there's a lot of room between 112 and 115, right? That's a 300 pip move. Whoa. Wait. Oh, we have data coming out. I was like, what? Why is everything getting so volatile? Some just come out. Okay. Jobless
Initial
claims.
jobless claims,
No,
Blake.
but that wasn't
A little bit, but
yeah. That
yeah.
I know jobless claims are just coming out, but it looked like the euro just okay. Thank you. I knew that was coming out. The reason why I was saying something is this Aussie New Zealand, which obviously I'm watching very carefully, it spiked up towards 20, and I'm like, I thought there might have been some sort of trade news coming out, but there wasn't. It was just jobless claims. I knew that was coming out, and I didn't think it was going to move the needle, which it really hasn't. But again, what I want to point out here is if a deal gets done and bonds drop and yields rally, this dollar yen,
Yeah.
I mean, you look at it, this is squeeze the hell out of people. I mean, we could be 112 to 114 pretty fast. And that is something that I wanted to note. Okay, I wanted to note. Now, there's one other thing that I wanted to state before I turn it over to Steve. We had a trade competition that displayed trade stations. We had two winners, and I don't know the winners off the top of my hand because I have them written down. That I have to go. I have a printout. I have to go find it. I have one lady and a gentleman who's in India actually, and he was a random winner. And those, if you guys are listening in right now, those packages are going out this Friday. It took me hours. I say hours, and a lot of heartache to locate the hats. For those of you that don't know, I just relocated. I moved down the street, like 2 miles down the street. So I relocated my home over the last couple months. Unfortunately, I relocated my hats somewhere that I had no idea where they were at. So it took me a while to find those. So just want to let you guys know I have located the items and they are getting sent out this Friday. So congratulations to those winners. Dale, I wanted to say happy anniversary. I'm so happy to have you part of our team. You are such a great host, and you're such a great guy, and it's a pleasure to have you here.
And such a great singer.
And such a great singer too. And I want to thank our community for supporting us and being here every day with us. So I hope that you guys get something out of this every day. So Coach, it's all yours.
Okay,
Steve,
buddy.
it's all yours. And I think Stelios is right here too.
All right, good hunting, buddy, and thank you, Blake. You and Steve and Stel have put together the strongest FX team on the net, in my extremely accurate and humble opinion.
Well, thanks. All right, and Steve, good to have you back. At least if it's just for today, it's nice to have you back. So,
if all goes well, it's not just for today.
Good, buddy.
All right, thanks.
All right. Good luck today, Blake, and
thanks, guys.
Everyone in the chat room, and everyone should consider joining. So when Blake leaves right now, there's 100 people in there, so you have about 200 eyeballs looking at so many different things and putting out charts and helping people that are fairly new, and you learn in there. And if you really want to get good at this, I'm just going to bring up Ronan's testimony for the last time. He said he found Blake on Chat with Traders and has been here since the onset of ForexAnalytix. And he said it's a game changer. And you know how I believe him? I've seen his trades. Okay, so he's a pro now. Okay, he's very good. So you can do the same thing Ronan did. You join, you immerse yourself, you surround yourself with great traders, and you will rise to that level. Go ahead, Steve. I just shorted the Dixie and bought Euro. So, Steve?
Yeah, I'm here. I'm here, Dale. I just didn't want to steal your thunder.
Yeah, and Steve's in there a lot, and posts every idea, and you guys know how
Actually, I haven't been there a lot lately because I had the trip.
Right.
And now but I have to admit that today I got really lucky because when when I had a little bit of a time in the hospital, I had to look through my charts to, go through them. And, the first thing I looked at was palladium, because I was looking for an opportunity to short a bounce, because unfortunately I didn't short the top, although, I saw the signs. And, I got lucky enough, and I actually, I actually shorted it like, what is it? Less than 2 hours ago, 1.5 hours ago, and I wrote that in the chat room. And palladium is already like $25 lower. So at least I did produce something today in the chat room. I mean, and this is the chart. Actually, I shorted it here, here at this peak, and we had this nice move. And not only that, I think that we can see also here in head and shoulders formation. So most probably there is more downside. My initial target is that low, but I do think we can make it even lower from there. So I think that palladium was already proved to be quite a good trade. I de-risked it immediately. And gold at the same time, as you see, is breaking this little triangle. So I think that gold is also on its way to my first target, which is at 1281. That's actually where I've set it, because at 1280.57 we have this previous low. I'm going to take partial profits there, and then I'm going to be looking to take the rest off at 1265 is where I have an order. So hopefully we're even going to make it down there. So metals, bottom line, and here is the RSI trend line you can watch here in the metals. There it is. I was monitoring also this on a lower time frame. RSI looks very corrective, and we seem to be breaking lower as well. If you have a look at silver, and then I'm going to go, I've already seen your questions. Silver is also at the same time breaking below this triangle. Keep in mind, 1480 is quite a massive support area for silver. It's the rectangles, this rectangles resistance zone. You can see it. Silver was trading in a rectangle that is actually what confirmed the breakout from there. And as you see, it accelerated once it did that, and now we're threatening of retesting this previous resistance as support. And if we break back below it, that's going to be quite a bearish development. So if you're really looking for higher prices in silver, you don't want to see that 1480 getting violated. On the other hand, I have absolutely no idea what's happening from a fundamental standpoint, but oppositely than what it has been doing for a long period of time, years actually. One metal that seems to be well beat today as well, is platinum. So platinum is actually almost at this ascending channels resistance. So I'm quite carefully monitoring platinum, because this kind of a divergence, especially considering how much platinum has been beaten down during the past few years, makes me a little bit, open. Makes me open to the idea of probably gaining some exposure, gaining some kind of exposure long platinum against some of the other metals, perhaps, to not have the dollar risk at all in the equation. So I'm considering that. I'm monitoring the platinum, gold, platinum, silver. Platinum, gold, platinum, silver, and platinum, palladium ratios. Platinum, palladium looks quite good. For another opportunity in participating in metals. I've been doing well with metals, so I have no reason not to keep on trading them. Now, one thing that has happened while I was away is the fact that crude actually exploded higher. It was in a rectangle, so it actually fulfilled the rectangle's target when it hit 62.26. But even after making it even higher to the 227 and seeing this pullback, I have to admit, looks corrective so far. So what I'm monitoring now is this ascending channel resistance, which currently passes from 63.5. We also have massive horizontal resistance area at 64. So I think I'm going to start building in some shorts in crude quite soon, as I was doing on the way down to 42, and that worked out beautifully for me. I think I'm going to start gaining some short exposure in crude. I'm probably going to dip my toes in at 63 and a half, probably like 1/3 of a position and another third at 64. And I'm going to start seeing how, price action reacts, because I still believe that, at the very least, we should soon be seeing some kind of a corrective move lower, a deeper corrective move lower. So despite not having some evidence that crude is turning yet, I know that 63 and a half and 64 are quite strong resistance areas. And given the fact that we've already moved from the lows, let's see, 50% higher, almost, as you see, a little bit more than 49% higher from December to today. So that's like a huge move to the upside. I think that we are due for some kind of a deeper correction, even if crude is to resume to the upside following that. So no trade yet for me here, but I'm definitely looking to yeah, got it, cancel. Now let me remember what else I had in mind to go through. Okay, very briefly, Aussie still in a triangle, in the middle of the triangle, actually. The more we consolidate here, the more I think the chances are that we're going to see at least one more move to the downside, because keep in mind, we have been moving lower. So Aussie looks, rather bearish to me. And another thing that confirms here is the fact that Kiwi has been toying around with the idea. This is the third consecutive day that Kiwi has been toying around with the idea of breaking lower from the equivalent target triangle here. Okay, so I think that if Kiwi does the move first, because Kiwi is right on support while Aussie is in the middle of the triangle, as we said, I think that Aussie is going to follow suit and do more or less the same thing. It doesn't matter if it's going to overperform the Kiwi, as Blake has shown, and we have shown it as well the previous week. Aussie Kiwi has been breaking higher after a beautiful confluence of supports here and the breakout from this descending wedge. We're now breaking over another descending trend line resistance. And, we're getting close to this 1053, 1054 area. I think that, even if, actually, if we even break that, then there is no real resistance all the way up to 1065. So Aussie Kiwi looks very nice to the upside. And, I think that, once we break this, that should open up another 100 plus pips of upside, which, given the fact that this pair is not, a big mover, it's quite a nice move. Now, I still have my short position in the Kiwi yen. That's also in, in the money. That I more or less caught, perfectly this rebound. So I'm happy that all my last few positions, are doing well. I also added yesterday to my S&P short exposure, and the reason I did that was the 4-hour chart. And let me show you. It was this. I actually shorted the high here at 2881.7. I think was my entry, something like that. So almost a high, because of this wedge. So I'm looking to see if this is actually gonna work out. So far, of course, we have had no follow through. The price action, I have to admit, looks more or less corrective. I wouldn't be surprised to see an overthrow from this wedge, like a move towards 2900. But that's where I decided to add on that trade. As I've said, I'm not really at all anxious about it, because all the rest of my positions are doing well, especially Ethereum. I actually...
Oh, you still have that, Steve. Wow.
Oh, half of it, of course I do.
All right.
Unfortunately, due to being in the hospital and everything else, I didn't take profits yesterday because I had removed completely. I didn't have any stops in place anymore after it moved again away from my stop. I had removed, limit order, stop loss. So my initial idea was taking the rest of it off at 170. But since I saw that it
So
was
what do you
about,
do now?
I'm still very, very, very deeply in the money.
Right.
Yeah, so I'm not really anxious about how to handle that. I mean,
Okay.
I'm gonna think about it actually. I mean, I'm still considering perhaps taking profits here because I see that we had a sharp reversal from the highs and
Yeah.
we're now consolidating. So I wouldn't find it unlikely that we have at least one more leg to the downside. So
Okay.
since I'm more than 20% in the money now on the rest of my half a position, it's
I have to
yeah.
say this for someone who, you know, comes on when I'm interviewing at least a few times, someone who's into the crypto space and talks about how it's a completely worthless thing. You can no longer say that because you made money in it.
Oh yeah, but one is a
I know,
fundamental,
I know.
one is a fundamental thesis, and the other one is a technical thesis, right?
I'm teasing you, but
Yeah,
that shows
and
that
that's actually
it's
a good
funny,
answer.
isn't it?
I had a couple of people writing in one of my videos in Real Vision. I realized actually that there are a lot of Real Vision viewers that don't believe at all at technical analysis. I mean, one of them was complaining like, "Oh, please put some kind of a disclaimer on top of a video when somebody wants to talk about technicals." Or separate them, so they don't bother us or whatever. And there was another guy mocking technical analysis, and
Oh yeah.
I find it quite fun. Also, there was a guy yesterday that wrote on a comment on YouTube on one of our webinars videos about if you want to have more subscribers, stop the waves analysis. And I really find all those comments funny because I know a decent amount of very, very competent technical traders that do very well for themselves. Very well for themselves. So I really don't understand why there are some people that don't understand that if you're a technical trader, that does not prevent you from having a fundamental thesis, right? As long as you can separate the two of them, because the two of them
Right.
have something that differentiates them by a lot, and that is the time frame. Fundamental analysis, macro themes have no time frame, not a specific time frame. Stelios can tell you a lot more about that than I can. I mean, sometimes you have to be extremely patient for what you know is true to come into fruition, because very often the markets tend to ignore fundamentals for a long period of time, while technicals. And I actually answered to that guy in Real Vision, explaining to him that, listen, I've had people that actually paid me. They were macro people, and paid me to teach them how to time their entries and their exits better, because having a macro thesis is a great thing.
I was one of them.
Yeah. So having a macro thesis is a great thing, but it's even greater if you can actually from the price action judge when your macro thesis is about to start paying off, and when perhaps it's time that you collect your profits from your macro thesis. So I don't understand why some people don't understand that those two things go hand in hand. If you are competent enough and understand how the economy works, and you can have a macro thesis, that's a blessing. But not being able to take advantage of that by having some knowledge on technicals and price action as well, that's really a pity, because anybody can learn basic technical analysis, right? So they go together. I mean, one enhances the other. Uh, there are people that make money just from trading macro, but they would make more, right? There are also a lot of people that make money just by trading technicals, and they have absolutely no idea, and they don't care at all about what are the fundamentals. And the main argument those people have, and I agree with that, in an extent, is that price incorporates everything, right? So if there is something fundamentally that the market wants to care about, that is also going to be displayed from the price action, right? So they don't feel like they need to know. And as I said, up to a point, I agree. But as I said, for macro people that don't know technical analysis, the opposite is true. I think that everybody can benefit by having an idea.
How about this, Steve? I interviewed Schwager, and I asked Jack, what his feelings were about fundamental and technical analysis, and his thing is use both. But he said the most dangerous thing are people who are strictly fundamentalists, because if they buy something and it gets cheaper and the fundamental argument is still
hasn't changed, they go even deeper.
And because they don't utilize technicals, it's hard for them to have risk management because their narrative doesn't change.
Exactly. And something, coach, there are a lot of people that know the stories of, for example, the few investors that shorted the subprime market in 2007, 2008, and made a killing.
But they took heat for a long time, though.
Not only that, nobody has read about the people that, for the same exact right reasons, were shorting the same market at 2004, 2005, 2006. And when the time came that it actually, the problem actually came on the surface and manifested,
they were broke.
They were broke, exactly. Yeah. Nobody reads about them, right?
Yeah.
And it doesn't, at the end of the day,
I'm glad. I'm glad people don't read about me.
Yeah. And, at the end of the day, it doesn't matter that they can go to their friends and say, I knew it. I was telling everybody that the market is going to implode, right? But, what did you do? What did you end up doing about it? I mean, you lost money instead of making money, right? Why? Because probably you didn't take, technicals into account. You know that I'm a big dollar bear. Am I shorting the dollar? No. Why? Because the technicals tell me that this is not the time, right?
Beautiful mentoring, man.
Thank you. I'm just, giving my perspective.
Natural teacher. I think all the guys are. Greg, I was asking what separates his Elliott work from others, and so we not only share ideas in the market, but there's also learning going on here. And you know what? I think that's almost or even more important than tips, pattern, and plays working out, because it's our goal. Of course, we'd always like to have people with us, but our goal that you become independent of everyone, not dependent on anyone. And learning the hows is what's going to get you there, because you know what? One day, all of us here at ForexAnalytix, we, may not, be doing this. But what we want to do is leave a legacy of knowledge with you guys, so that 10 years from now, you could go, I remember Steve saying, you needed to wait for confirmation. And, oh, yeah, there's that divergence and a 3-drive pattern, so that you guys can repeat it on your own. So
you know something, the most fulfilling thing has been for me in ForexAnalytix, seeing some people that have made it from the level of, let's say, an amateur or an advanced amateur to the point of being now, and we have people like this in the chat room, being an equal
contemporary
exactly, and exchanging ideas, and now seeing that that person that one day came and they were unsure about themselves, etc., they put on the work, they did well for themselves, and now they're actually very competent traders. It's really,
it's almost as good as making money for yourself, isn't it?
Yeah, it is actually. It is, because it covers another need. It's more, let's say,
humanity. You feel like you're contributing.
Yeah, exactly. Which I think that every person likes that feeling, right?
Yeah, I do.
I think anybody that's healthy does.
Yeah, Stelio, a lot of people in the business paid for it. Hey,
Stelio, I don't know. Oh, he's still he's off to take the girls. Okay.
Okay.
We forgot to get his input. Although I can give you his input in advance, we probably had some BS happening with Brexit as well. Another saga. In all honesty, I would pay almost anything to get rid of the Chinese trade deal and the Brexit saga. I mean,
how about this? Cellulose long-term like silver.
Oh yeah, he does. And let me tell you something. He
Agree
he's,
with him.
he's gonna definitely get paid for that. I mean, there is zero doubt in my mind. I mean, from a macro thesis, one thing that I'm 100% certain about is that I don't know if it's going to be this year, if it's going to be next year. It doesn't really matter. But people that have been patient with real assets like metals are going to have a big payday. I have absolutely no doubt about that. I can't tell you what the time horizon is going to be. I'm going to wait for the technicals to align with the fundamentals. But
when the Fed flips, when the Fed finally has to cut, which, I don't think is going to be this year, but I think that's going to be it. When the Fed panics, that'll be the end of the dollar rally. Maybe it's over par 102, who knows, whatever, and wherever gold is at that time. But really, I think the key shift is going to be the Fed worried about maybe 2000 in the S&P and flipping.
One thing is for sure, Coach, I think that they will do their best to hold the economy afloat, to keep it afloat by the election time in 2020. They will do everything possible. Will they succeed? I give them less than 50% chance.
Well, maybe look, they succeeded for let's call it 10 years now. Maybe next time it's only 10 months.
Yes, but you know how it is. I mean, if I keep on putting 1 kilo at a time at a bag that you're holding, at the beginning it doesn't make much of a difference. You can hold it easily, but there comes the point that every extra kilo feels like an anvil. You know what I mean?
Yeah, and there's one grain of sand that finally breaks the camel's back.
The straw that breaks the camel's back. Yes, exactly. So I think that we're very, very close to that point. Very close. Nobody can tell you exactly how close, but I'm pretty sure that we're very close.
Come on, Nostrovology.
I still believe that 2019 is more likely to be the year that the markets will implode. I think they're going to try to push it to the end of next year if possible. But many times we want to do something and we fail at it. Anyhow, let me have a look about questions.
And I'll be right back. And Danny Less is with us, and I wish Stelios was around because Danny spent time on the life floor. Anyway, go ahead, Stephen. I'll be back in 2.
We have questions about the Nifty, and let me say briefly here, quite a nasty rejection from previous high, so be a little bit careful here, because getting rejected from the high there is obviously not a good sign. Although there is also the possibility that we might make even something nastier here, which is probably have one more push higher to complete an ascending wedge, get a lot of people trapped long because we're going to break to new highs, and then the reverse. So that wouldn't surprise me much either. Bank Nifty had already broken to new highs. I can tell you that much. And as you see, it almost made it to the 161.8% extension. Clear RSI divergence here as we had for the Nifty. So be careful here as well. Both of them, despite looking very, very bullish, are in need for at least some type of a pullback. Okay, so in the short term, I think the bears might do well, but of course you need to respect the trend which remains higher for both of them. And our friend here also asked for the Indian rupee. Situation with the Indian rupee is quite clear, as we had said. There is this descending triangle. As long as we hold below it, we have to respect the larger trend, which is higher. It is what it is. Keep looking to the upside until proven otherwise. So I wouldn't be long the INR here, or I wouldn't be short the USD INR at this occasion. That's what I have to say about that. Oil production, we have a comment from Joshua. Oil production and supply increasing last week and only operating at 87% capacity, still room to increase production. even though demand will increase over the next few months, I believe production will as well. Yes, this is a good fundamental point. Can you share your view on pound kiwi and pound CAD? Yeah, let's go through that, and then we can cover whatever else is tomorrow, so we don't bleed into Dale's interview. So here is the pound Aussie. Pound Aussie is still going around with this channel. I mean, we broke below it, we broke back above it again. Price action to the downside doesn't look impulsive for sure. So despite having that false break, I would be paying attention to this trend line here. I know a lot of trend lines. I'm going to clean this chart up, so pay attention a little bit. Okay, all this have happened. So pay attention to this trend line, because if we break above it, I think that we can see another push to the upside towards this trend line resistance once again, because don't forget that this trend line resistance has capped price action 3 times already. Okay, so this is my point of view on the pound Aussie and the pound Kiwi. Pound Kiwi, trapped within this range between 195 and 190, so 500 pips of a range. If we clear this 195 area, expect an extension to the upside towards 2. On the other hand, for me to turn bearish, I need to see a move below 190, below 189.60, something like that, in which case you can expect a move towards this larger channels support. So bottom line, you either short here for another move towards the bottom of this range that we've been trapped to, or you wait for a breakout above 195 and then expect an extension towards 2. That's where we stand in the pound Kiwi. It looks good though. It's holding up quite well, and the pound Aussie also is holding up quite well. So just judging by those 2 charts, I wouldn't be surprised if the next short-term move is to the upside. Thank you. Confirm my bias as well, says Elena. My pleasure. Thank you, Coach. Enjoy the interview. See you all tomorrow.
Okay, Steve. Thank you, buddy. Danny, I'm going to make you the presenter now. Looking forward to hearing your voice and having a conversation with you. And we're 2 floor guys from the other side of the pond. Hi, Danny.
How are you?
Good. Great to meet you.
Nice
Yeah, very nice to meet you. Thank you so much for taking some time out. And okay, I know you want to talk a little bit about crypto. I'd like to start with, you told me you spent some time on the life floor.
We don't have to talk crypto, Dale. It's
okay. It's okay.
Stylianos did such a stellar job explaining his opinion on Ethereum at the moment that I thought.
Oh yeah, we have a dream team. So Danny, anyway, Danny, tell us how you got to the life. How did that happen?
So to put it very simply, I was not a very good student in school. And I guess my problem was generally with authority. I didn't really like being told what to do, and that kind of started at quite a young age. So I left school under a bit of a cloud of, a bit of a dark cloud, let's say. And I was not particularly qualified to do much when leaving. It wasn't because I was stupid, it was just simply because I didn't really like the educational system. It didn't really sit right with me. So I was working in retail, and designer menswear was the area that I was positioned in from the back end of school into my late teens. And I guess I always had a bit of hustle about me in that sense, and that was why I was pretty good at upselling when on the shop floor. A lot of the money that we made in that environment was commission based, so you had to hit targets, you had to sell a lot of clothes. And
did they ever use this expression, which we've all done things? I mean, I sold cars for a while I was a commodity broker, and they had an expression: B-backs are not greenbacks. So you had to learn how to be a closer.
Basically,
you were
enough.
natural, huh?
I was a pretty natural closer. I think you could
Okay.
probably. I was a pretty natural closer.
Yeah.
And I remember one day a gentleman came in, and he was. I remember it vividly, obviously, because it's such a key part of my life. He was about to go on holiday the following day with his wife, and he hadn't had time to buy any holiday clothing, so shorts, t-shirts, etc., etc.
Yeah.
And he was under pressure to get some stuff by his wife, so he came in, and he just came in literally to get a few pairs of shorts and t-shirts and kind of be gone so that he could get on the rest of his day before traveling the next day. And I latched on to him, and he ended up buying some suits and some ties and some shirts and shoes, and actually not very many pairs of shorts and t-shirts. And he kind of got to the end, his bill was very high, and you could see he was saying to me, I don't even know how this has happened. My wife's going to kill me. I'm not even sure why I've just bought all of this stuff. He left the store, and within about a minute he came back and he said to me, you probably shouldn't be working here. And I didn't really know how to take that. I was quite young. I was like 17. And he said, here's my business card. Please give me a call. I think you could be quite interested in what I do. I think you could quite suit what I do. So he gave me his card. I didn't really have a clue as to exactly what the nature of his business was. But it said on his card, LIFFE, futures options, trading platform, desk, whatever. And I remember giving it to the store manager and saying to him, do you know what this is? And he was a slightly older gentleman, and he said to me, yeah, you should probably give him a call. This is pretty interesting. You should probably give him a call. And so that's what I did. I gave him a call. And the next thing, I was having an interview, an office in the city. And he said,
What a great break. I mean, yeah, really, Danny, what people have to go through nowadays, I'm not sure what the life is like now, but I've been back to Chicago, and the trading floors are bowling alleys. Huh?
We don't have it there. We don't have it anymore.
Oh, okay. So that's even less than a bowling alley.
Closed down 18, 19 years ago now. So
okay, so a lot of people have to find their way on the internet now, and there's so much misrepresentation and charlatans out there, and people promising they'll sell the secret to trading. And the secret to me is hard work and perseverance. That's the secret. So what was your first position with this trader? What were you doing? Were you on a desk taking orders from people, or?
No, so I was put straight on the floor as a runner.
Okay, yeah, okay.
So basically, the members' office would take the calls and the requests for trades. They would then get fed down to the floor, and then they would be passed to us, and we would run to the pits, and we would relay them to.
Okay, I did exactly that, and the brokers held what they call as their deck, the paper, right? It was paper in those days. Yeah. Let me ask you this: as a runner, did you notice that the floor brokers had an increased interest in orders that had STP at the end of it?
Yes.
Huh? So so they knew where the stops were, and they were really interested in those because that could be liquidity if they're long and buy stops get hit, for them to use that liquidity to come out of it. And let me ask you this: as a runner, did you notice that when stops were elected, you'd actually hear some type of audible roar, and at times it ended up being a turning point for an hour, for a day, or maybe longer?
Well, I don't know if it was audible roar. It was more you'd often get a howl or quite a loud, shriek of laughter at times.
Fast market?
Say again?
They put up on the board fast market?
No, not necessarily. Someone would call it often. The boards were very primitive. You know, there wasn't much